Hello, this is Adrian Day with another of our video highlights. If you'd like to learn more about the topic that we discussed today, you can watch the full interviews on our website at adriandayassetmanagement.com, where of course you can also find more information about our services. Sit back and I hope you enjoy. Thank you. Gold has a better risk reward than other things. I will say there's no question, but with gold's big run over particularly this year, gold is now, or let's put it the other way around, other assets are comparatively undervalued. So natural gas, oil, I think you just we're talking to Rick, I'm sure.
Yes, that was his pick.
So oil, natural gas, but I would also say copper, although in the immediate term, maybe it's a little bit high because of all the shutdowns. Much the same as what I said for gold. Of course, with silver, you had a price that was now equal to its all-time high in nominal terms, not inflation adjusted, of course, unlike gold. But at least you had a point where you could point to and say, oh, it's exceeded its all-time highs. That always is a thing that starts to make people nervous. It is still undervalued relative to gold, of course.
First of all, I look at stuff that's really unloved, where prices are down. So oil and gas is a perfect example. The narrative on oil is that within 10 years, we're not going to be using oil anymore. That's just nonsense. That's not going to happen. And so when you've got a narrative that is so far off, and yet investors believe the narrative and hate it, so no money's going into capital investment, or very little money is going into capital investment, that strikes me as a perfect setup for a sharp recovery in prices.
The US would be looking very defensively, generally speaking. So we'd be looking at consumer staples, for example, or utilities, or high-income stocks, which have not done so well over the last 15 years of this bull market. You said any stocks. I certainly think there are markets that are less overvalued and represent good value. The British market right now is quite undervalued. And it's undervalued because, of course, the sentiment on Britain right now is very weak because of the current government just messing everything up, messing everything up. And so the sentiment towards Britain is weak. But when you think that most of the better companies in Britain, most of the bigger companies are exporters, the fact that Britain is a mess and the fact that the pound is weak is actually a positive for those companies. I think Hong Kong stocks are cheap, very undervalued. Singapore is very undervalued. Japanese stocks are quite reasonably valued. So there's a lot of markets around the world that I think are relatively good value, but generally it's a bottom-up approach, and that can be all sorts of things. I mean, we own an entertainment company in Singapore called Kingsman, which is a great little company. It's only 100 million market cap, but it's a great little company with growth, with a dividend. And they're doing all sorts of, they're designing all sorts of interactive entertainment for Singapore and for China. So growth there is very strong. In the US, we're buying a company called Ares Capital, which is a business development company, lends money to small private companies. And that's the kind of company that people kind of get nervous of when the economy is weakening. But for various reasons we don't have to get into now, we can if you want, but for various reasons, these companies tend to do well when the economy is a little weak. Not when it's extremely weak, but a little weak, because companies still want money, right? Private companies still want money. They still want capital, but they can't get it from the banks. And so they go to alternative sources of capital to get the money, which means the BDCs are getting better quality companies and they can afford to pay, they can afford to demand higher interest rates. So a company like Ares, for example, is yielding 9.5% right now, fully covered by earnings. So a company like that, I think, is good for retired people. I'm not suggesting you buy it, but for people who want income, something like that's good. But we're just seeing value everywhere. I mean, I'll name one more. In England, there's a company called Fever Tree. Some people will know Fever Tree because they make a ginger ale that is the ginger ale of choice of most bartenders in the US. You go to a bar, I've done this with some friends when we're talking about it at dinner. I said, just ask the bartender what ginger ale he uses. 9 times out of 10, they're buying Fever Tree, which is a British company, because they make the best ginger out there. Now, Fever Tree is a British company. They started expanding into the US, which is great because the US is a big market. But the real game changer was when Molson Coors, they took a 10% position in the company. They're now manufacturing it in America, which means you don't have to worry about tariffs anymore. They're manufacturing it in the US, and more importantly, I think they're getting the distribution. But again, as you can see from the 3 examples I gave you, there's no overarching theme. We're just looking bottom up at good quality companies that have a story, if you like, a story for growth.